Good evening, ladies and gentlemen. Thank you for watching this training video. We're going to be talking about correcting your tax withholding. So we're going to be going over 2018 Form W-4. We're going to be providing instructions on how to properly fill out the form so you can have the correct amount of taxes withheld from your pay. Then the IRS released a publication saying that majority of Americans had this form filled out incorrectly. Now, when it was filled out incorrectly, it was causing the overpayment and taxes, which we call our tax refunds. Now, the problem with that is people are losing their ROI, they're returning their investment. So they're not actually able to pay down or eliminate their debt and have money for investing later. What happens is you're using it as a forced savings method to get money back at the end of the year, or you're paying interest throughout the year and not being able to reduce that interest. Secondly, you're allowing somebody to hold your money without making any money on your money. So you got a double whammy. So let's go into the form and talk about the form. We'll talk about how you can possibly increase your take-home pay. On average, we're seeing about $200 to $600 per month. Now, we do have some disclaimers, which is a must because not everybody's going to meet the same criteria, and things are going to be just different for each individual. So we have these disclaimers in here, but that's not the vast majority, but you have to safeguard. So we'll go over those disclaimers. MyEcon does not guarantee you will receive an increase in your paycheck by adjusting your Form W-4. If you owe taxes or have penalties, even a mild adjustment may not see a return in income or return in money. Now, results will vary based on each individual unique financial situation. Now, that is something very, very important. You can also see a qualified tax professional if you are unsure about the form. Do not hesitate to seek advice about this form if you have any issues. It's very, very important, though, that you recognize the form, read the form thoroughly, and have it filled out correctly. All right, and let's go into the purpose of the Form W-4. The purpose of the Form W-4 has been in the top left-hand corner since its existence. And it says, complete Form W-4 so that your employer can withhold the correct federal income tax from your pay. Consider completing a new Form W-4 each year and when your personal financial situation changes. Now, let's go over the rules. You are responsible for the accuracy on this form. Read the form. You're always responsible. Even if you put down 2 or you put down 1 because that's what your employer or your HR department told you to, you're still responsible for the form. So you're responsible for your overpayment, and you're responsible for not really understanding the process because you did not completely read and understand the form. You're responsible for the accuracy of the form. You should update your Form W-4 each and every year. And you should also update it within that year when you have life changes. That's very, very important. Now, why do most people have their Form W-4 filled out incorrectly, and why so often? We're going to go through those reasons. The main reason is because people do not update their Form W-4 annually. They did not follow the purpose in the form. Number 2, this is a big one. Exemptions are often confused with allowances. Exemptions are not allowance. This, when you see, you'll understand when we get to the next page that this is an allowance worksheet. So we don't want people getting confused because actually exemptions are only covered on a small portion of the form. For years, it's only actually been one question. So we get that confused. We'll go into the form and we'll say, I got 1 for me, I got 1 for my wife, I got 2 kids, so I got 4 exemptions. Well, yeah, you have 4 exemptions, but that's an allowance-based worksheet. So we're going to get to that in a little bit more detail. So maybe you can see something that you're missing out on. Now, we're going to start with this family, the Johnson family. We're going to base our example off of this family. And we're going to be talking about their family status. They are married, filing jointly. They have $100,000 in income. The husband's made $45,000, and the wife has made $55,000. They have 2 dependents, ages 8 and 10. Now, you see the disparity in income. Yes, the woman's movement. So for the sake of this example, we're going to put that there. Guys, don't get bent out of shape. It is what it is. It's just a form. Okay, so let's go. The next page on the Form W-4 says Personal Allowance Worksheet. That's what it is. Each allowance is tied to a number. That number for each allowance is a deduction to your taxes and actually compounds to your adjusted gross income, which gives you a deduction in taxes. Most of the time when you actually fill out this form, you fill it out with not enough allowances. You fill it out based off of exemptions. That's where your tax refund comes from. The tax refund comes from because you counted exemptions instead of allowances and misappropriately filled out the form. So let's start with line A. Line A says enter 1 for yourself. So we're going to enter 1 on line A. Line B says enter 1 if you file as married, filing jointly. So we're going to enter 1 for the Johnson family. Line number C says enter 1 if you're filing head of the household. Now head of household. The stipulations of head of household. Most people think that I'm the man, I'm the head of my household, so I'm going to fill in 1 for head of household. That's incorrect. Head of house says generally you can claim head of household filing status on your tax return only if you're unmarried and pay more than 50% of the cost of keeping up a home for yourself and a qualified individual. See publication 501 for more information about filing status. So here's what that leads to with that filing status. You are unmarried on the last day of the year. You paid more than 50% of the upkeep costs of a home. Qualifying persons live with you for more than half the year. Now this is awesome too. You have a child in college, still counts as a dependent. So don't forget that also. That's very, very important. A dependent parent does not have to live with you. So that's awesome too. If you're taking care of a parent that does not live with you, you do qualify. Paying child support does not qualify. No child support, people. Okay, so the Johnson family does not qualify for head of household. So we're going to put 0 on line C. Line D says if, enter 1 if you're single or married filing separately and have only 1 job. Or you're married filing jointly, have only 1 job and your spouse does not work. Or your wages from a second job or your spouse's wages or the total of both are less than $1,500. Now the Johnsons do not meet these requirements, so we're going to enter in 0 on line D. And we're going to go to line E, which is the child tax credit. Now this is pretty huge. A lot of people have been entering 1 for each child, but we want to actually look at the form and we're going to dive into it. It says if your total income will be less than $69,801, $101,401 if married filing jointly, enter 4 for each eligible child. If your income will be from $69,801 to $175,550, $101,401 to $339,000 if married filing jointly, into 2 for each eligible child. Now, if it's $175,551 to $200,000, $339,001 to $400,000 if married, you're going to be entering 1. And if over $200,000, $400,000 if married, you're going to enter in 0. Well, the Johnsons' income was under $100,000. So they're going to be entering 4 per child. They have 2 children, 8 and 10. So on line E, they're going to be entering 8 in line E. Now line F, this is for dependent credits. This is for the qualifying dependents that you have. You can read the publications to find out a little bit more. But it says if your total income will be less than $69,101,401 if married filing jointly, enter 1 for each eligible dependent. Now the numbers will go down, so forth and so on, but we know the Johnsons didn't have any other dependents, so we're going to enter in 0 on line F. Now line G says if you have other credits, see worksheet 1 through 6, publication 505, and enter the amount from that worksheet here. Now the Johnsons didn't have any other credits, so we're going to enter in 0 on line G. Line H says add lines A through G and enter the total here. that total is going to be 10. So they have 10 allowances on the front of this worksheet. But we need to complete all forms. For accuracy, complete all worksheets that apply. So there are some criteria to go into the next worksheets. So the criteria are, if you plan to itemize or file a Schedule A, or if you have adjustments to income, if you have job earners or married filing jointly and both spouses work, they have multiple jobs. So in the case of the Johnsons, they meet 2 of the requirements. They have started their MyEcon business and they plan to make adjustments to the income. They are also married filing jointly and they both work, making them a 2-earner household. So number 1, they plan to itemize. Number 2, they have adjustments to income. They're 2 earners and they have multiple jobs. So that's going to bring them to this form: deductions, adjustments, and additional income worksheet. Now this one is a pretty cool form, which a lot of people actually miss out on. So they actually lose a lot of money throughout the year because they actually have itemized deductions. They have homes, they have a lot of stuff that they write off on their taxes, and they have itemized deductions year after year after year. Well, if you have those itemized deductions, you should fill out this form every year so you can put the total of last year's itemized deductions on line 1. You base it off of 2017. So your itemized deductions will be coming and applied here, so you can actually claim them on your tax year and actually have that formulated into your allowances and deductions and get that on your paycheck also. So line 1 says, enter an estimate of your 2018 itemized deductions. These include qualifying home mortgage interest, charitable contributions, state and local taxes up to $10,000, and medical expenses in excess of 7.5% of your income. See publication 505 for details. Now, in this case, the Johnsons are in year 1. They haven't actually been following or keeping up with their taxes, so they are not itemizing. So we're going to enter in 0 on line 1. Now, line 2. Line 2 says, enter $24,000 if you're married filing jointly or qualifying widow, $18,000 if you're head of the household, or $12,000 if you're filing single. The Johnsons are married filing jointly, so we're going to enter $24,000 on line 2. Line 3 says subtract line 2 from line 1. If 0 or less, enter 0. So for this, we already know you minus the 24 out of 0, so you're going to have 0 on line 3. Now this is the good one right here. This is the good line for business owners. Line 4 says enter in an estimate of your 2018 adjustments to income and any additional standard deduction for age or blindness. See publication 505 for more information about these items. So let's take a look at what consists of adjustments to income. On page 8 of publication 505, you'll find items that create adjustments to income. Now, in this case, the Johnson family, they have recently just started their MyEcon business. So it's estimated that they will have net losses from their business in their first year. As with any other business, Amazon took losses for the first 12 years they're in business. So the IRS expects you to come out and make a legitimate attempt to make a profit, but they expect you to actually take a loss in your first year of business while you're trying to acclimate yourself and build a business. They understand that you have to build something. Okay, so these net losses will come from the form Schedule C that you'll file in business. Now they'll come from the things that they write off, such as car and truck expenses, communications, cell phone, internet access, travel. So you travel for business, catch a flight, rent a hotel, buy a hotel stay, meals while you're actually out of town, and wages. So that's where these losses come from. They actually are things that you do in the nature of business that become tax deductible. Most of these things you do during everyday life anyway, so I want you to be mindful of that. Your car and truck, you drive your car and truck every day. So now, in the form of doing business or conducting business, it becomes tax deductible. The same with your communications, your cell phone you use every day, and you also use your internet access every day. So be mindful of those things. If you are a new associate in the MyEcon business, you did not have a Schedule C last year. So since you did not have that Schedule C, we want you to enter no more than $4,150 on line 4 of the deductions and adjustments worksheets. That's one allowance. One allowance is $4,150. So we want you to take the minimum while you get to understand your business and start learning your business, so you can learn and what you actually write off and your habits of what you write off for business, so you can carry over and fill out the form better next year. Okay, so we're going to go back to this page of the form, and this is what we're going to do. We're going to enter in $4,150 because this is the Johnson's first year in business. So we don't want them going overboard. We want them to take one allowance, and we want them to be able to learn the business and figure out where their deductions most come from. Line 5 says add lines 3 and 4 and enter the total here. That'll be $4,150. Line 6 says enter an estimate of your 2018 non-wage income, such as dividends and interest. The Johnsons didn't have anything, so we're going to put 0 on line 6. Line 7 says subtract line 6 from line 5, enter 0. If 0, enter 0. If less than 0, enter the amount in parentheses. So in this case, we're going to enter the $4,150. Line 8 says divide the amount on line 7 by $4,150 and enter the result. If a negative amount, enter the amount in parentheses. Drop any fraction. So we know 4,150 goes into that same exact number one time, so we've got 1 on line 8. Line 9 says enter the number of personal allowances from the personal allowance worksheets, line H above. So that is 10. So we had 10 on the prior worksheet, line H. So that number is on line 9. Now we're going to add lines 8 and 9 and enter the total here. If 0 or less, enter 0. Now if you plan to use the 2 earners multiple job worksheet, also enter the total on line 1, page 4. Otherwise, stop here and enter this total on Form W-4, line 5, page 1. You would enter 11. Now, because the Johnsons are 2 earners, we're going to go to the 2 earners worksheet so they can figure that out, so they can actually make sure they're not going to have too many exemptions and actually get penalized on the taxes. So we're going to fill out the 2 earner worksheet for the Johnsons. We're going to carry that 11 over to line 1. Then line 2 says find the number in table 1 below that applies to the lowest paying job and enter it here. However, if you're married filing jointly and wages from the highest paying job are $75,000 or less, and the combined wages for you and your spouses are $107,000 or less, enter in no more than 3. So let's go to the table, and we're going to find their job. Let's see the lowest paying job. Remember, it was $45,000, so we go between $43,501 and $55,000, and we see it says 6. Now, remember the Johnsons made $100,000, so they don't meet that threshold of $107,000. So since they don't, we're going to enter no more than 3. So we'll enter 3 on line 2 of the 2 earners worksheet. Now that we have that line there, line 3 says, if line 1 is more than or equal to line 2, subtract line 2 from 1. Enter the result here. If 0, enter 0. And on Form W-4, line 5, page 1. Do not use the rest of this worksheet. So we're going to subtract line 1 or line 2 from 1, which gives us 8. We're going to stop right here, and that is what we're going to fill out on the Form W-4 form, the actual worksheet form. So now that we're here, the Johnsons have 8 allowances. We're going to actually complete the withholding certificate. So you want to complete boxes 1, 2, 3, and 5. We're going to sign and date the forms. We're going to separate at the dotted line, and we're going to turn this into your HR department. But what I want everybody to realize is they now have 8 allowances. This is not based off of exemptions where they had 4 people in their family, so they took foreign taxes. We actually filled out the allowance worksheet. They're in business, so that gave them extra allowance, and they have 8 allowances on their worksheet. Now, as you're in business and you start to perform business a little bit more, you have more deductions, you'll have more allowances. So let's say you come into business and you have over $20,000 in deductions. We're going to divide that by the $4,150, and that will give you roughly, if we're going to just estimate it, will give you roughly 5 more allowances. In this case, we'll add on 4 more allowances. So you have 12 allowances. Now, this is crucial because it allows the Johnsons to get their money back throughout the year properly and actually then go into a debt elimination program. So this has been our instructional training on the Form W-4. I would like all you guys to revisit your Form W-4, make sure you have it filled out correctly. Now, once you fill out your Form W-4 and you get your money back, do not make your money part of your budget. Do not include your extra money as part of your budget. I repeat, do not include your extra money as part of your budget. With the extra money, you want to actually go into debt elimination and investing. So we're going to talk about that in the next video, so you'll have some guidelines on what you should be doing with that extra money. So for right now, visit your Form W-4, complete it properly, and save yourself some extra income. Thank you, guys. I hope you enjoyed this video, and I'll see you in the next video.